Okay, so you're tuning into the deep dive because you're looking to get smart fast. And today, we are jumping straight into the deep end of crypto. We're talking about that crazy initial burst of meme coin trading, right when they hit the public DXs. Some people call it first wave outer market trading.
Yeah, or PvP Phase 1, player versus player. We've been digging into this, and it's a very specific game. You've got these coins, maybe they start on Pump.Fun, right? And then boom, they land on Radium or another DX. And that immediate window, that's the battlefield.
Okay, right. So literally the first few minutes, maybe the first hour.
Exactly that. That's when it's pure chaos. The player versus player thing is real.
Player versus player. Who are the players then?
Well, you've got a mix. Early folks, quick flippers, and then the so-called smart money wallets. Traders who seem to nail these early calls often. All their activity together just creates these wild price swings, huge swings.
And that's where the big potential comes in. We saw mentions of like hundreds of thousands, even millions.
Yeah, the upside can be absolutely massive and
Yes.
incredibly fast, like life-changing money fast.
But okay, let's be real. It can't just be easy money flying around. What's the catch? The danger.
Oh, the risks are just as big, maybe bigger. It's super speculative. Prices go vertical, yeah, but they can crash back down just as fast, instantly. That PvP name, it fits. It's competitive. For someone to win big, often someone else has to lose big, especially right at the start.
And we saw some examples in the stuff we looked at, right? Coins like Trimfree, PNET, Mubarak.
Exactly. Those are
Yeah.
perfect examples. They had that crazy initial pump, that volatility. Shows you what we mean.
So our mission today then is to kind of dissect this whole rapid fire strategy, figure out what makes someone actually good at this beyond just, getting lucky.
Precisely. Because it is more than luck. There's a method to the madness, apparently. So the big question is, who actually pulls this off? Who thrives in this phase 1 chaos?
Yeah. I mean, it's definitely not your average investor just like dollar cost averaging into Bitcoin, right?
Oh, absolutely not. The successful phase 1 trader. Very specific breed, according to the material. First thing, intensity. Just sheer hardcore intensity. We're talking monitoring wallets, watching for launches, 10 hours a day, minimum.
10 hours every day. Wow, that's a full-time job and then some. Serious commitment.
It really is. And it's not just staring blankly. There's high coordination involved, these traders. They're usually plugged into small, elite Telegram groups or Discord. Places like the AVE AITG community got mentioned. That's where the info flows fastest.
Ah, okay. So it's about being in the right chat rooms, basically, getting that early signal before the masses.
Pretty much cutting through all the noise, because there is so much noise. And yeah, you might ask, how do you even get in those groups? There's definitely an edge for people already established. Information asymmetry,
Right, the inside track.
Yeah.
Makes sense. So intensity, coordination, what else? What's the third thing?
High awareness, super high awareness. They're not just reacting, they're building their own databases. Tracking specific wallets, the smart money, the whales, the KOLs.
KOLs, key opinion leaders, like influencers.
Exactly. People with big followings whose buy-in can move the needle early on. So these traders, they watch the blockchain, track what these influential wallets are doing, when they buy, when they sell.
So they're literally following the money, trying to piggyback on traders with a good track record.
That's a big part of it, understanding the on-chain flow.
Okay, fascinating. Now, the sources also talked about the 3 rules of first-wave warfare. Sounds pretty dramatic.
Well, it kind of is. It's a battleground, remember. Rule number 1, speed. Couldn't be clearer. The source literally said, if you're not early, you're exit liquidity.
Oof. Harsh, but probably true.
Yeah. Get in as the real money, the liquidity, starts hitting the DREX. If you hesitate, you're buying the top from the early guys cashing out.
So getting the info fast and clicking the buy button even faster? Critical. Okay, rule 2.
Rule 2 is precision. Speed isn't enough if you just jump into any random new coin. You need to instantly evaluate if it's even viable, even in that mad rush.
Evaluate how? What are they looking for in those few seconds?
Key things. Initial market cap, is it low enough to actually moon? How much liquidity is there? Can you even trade it properly? And, crucially, the risk versus the reward. Is the potential gain worth the very real risk of losing it all?
So a super fast gut check, but based on actual data points.
Exactly. And trying to tell the difference between, real smart money driving the FOMO versus just random Twitter hype with nothing behind it, looking for those signals of serious players moving in.
Got it. Speed, precision. What's the final rule of this warfare?
Rule 3, aggression. The source put it like this: when the setup is right, Go hard. When the thesis breaks, cut fast. Regret nothing.
Go hard, cut fast, so be decisive.
Totally. If your analysis says go, you go, commit. But, and this is maybe even more important, the second things look wrong. If your reason for buying disappears, you get out. Instantly. No hesitation.
That's the no ego part they mentioned, right? Don't fall in love with the coin, don't hope it comes back, just cut the loss.
Exactly. Play the odds, protect your capital. That's the name of the game.
Okay, that makes sense. So let's walk through the process. The source has laid out steps, right? How does someone actually do this?
Yeah, they broke it down. Step 1 is basically getting the jump on everyone else. Capture alpha early.
Right, finding that alpha. What tools or strategies are key for that?
Okay, number 1, real-time chain scanners. Aave.ai's Token Monitor was the example given. These let you see transactions, new token listings, like live as they happen on the blockchain. Raw data feed.
So you're seeing it before it even hits, maybe? Like CoinGecko or something?
Potentially,
Nice.
yeah. Or right as it hits. It's about that immediate view. Then those small, high-quality alpha groups we mentioned. Faster signal, less noise than big public channels. Then smart money tracking. Actively watching those wallets you've identified as being successful early players. See what they're buying now.
Okay.
And finally, yeah, keeping an eye on Twitter and Telegram, gauging the social buzz, the heat, building around coins.
So it's this combo of tech, networks, and just paying attention to the online chatter all at once.
Pretty much. It's a lot to juggle.
Okay, so you've got the potential alpha. Step 2 in the guide is decide fast, think clearly. Seems like the hardest part, maybe. Under pressure.
It's definitely where the rubber meets the road. You get that contract address, maybe a project name,
Yeah.
and the clock is ticking loudly. You have to ask yourself some key questions, like instantly.
Like what? What are those make or break questions?
Okay, is this market cap low enough for a good entry? You know, does it have room to run? Has it already pumped like crazy? Did I miss the first huge leg up?
Right.
What's the realistic upside here? Does it justify the risk I'm taking? Quick risk-reward calculation.
Okay.
And critically, are the whales, the smart money guys, actually buying this? Look for that validation.
And you have to answer all that. How fast?
Seconds. Minutes at most.
Yeah.
The guide literally says every minute matters. Yeah. Hesitate, and the opportunity is gone, or the price is way worse.
Wow. Okay. Intense. So that leads to step 3. Execute like a pro, making the actual trade.
Right. And the first thing to get is that these are not investments, not buy and hold. They're described as surgical trades. Quick in, quick out.
Scalping, almost.
Kind of, yeah. Very short term. Get in on the initial hype wave, grab a profit, and get out before it collapses. Because the guide warns these things can drop 80%, even 100%, super fast once that initial buzz fades.
100% drop. Back to zero.
Or near enough.
Yeah.
The risk is absolutely brutal. Rug pulls are also a factor here, though we didn't dive deep on that specific risk today.
So the advice has got to be, take profits when you see them. Don't get greedy.
Absolutely. Crystal clear on that.
Yeah.
Cash out when you're in profit, not when the price is already crashing. Discipline.
And the flip side, losing trades.
I cut them even faster. That quote they used. Red candle, don't freeze, exit. Don't sit there hoping. Just get out, save your capital for the next trade. Survival first.
Makes total sense. Protect the bankroll. Now, there were also some pretty strong warnings overall, right? This isn't for your average Joe.
No way. Big flashing red lights. The guide hammered this home. This is not buy and hold. This is not investing. It's high octane, high risk, high reward, driven by emotion, speed, skill.
And that zero-sum game idea again? Your win might be someone else's loss?
Yeah, in this initial PDP phase, that's often exactly how it works. It's a competition for liquidity.
And success isn't just looking into the right coin once?
Definitely not. The source stressed. You need data. You need awareness. You need that swift execution. Luck might give you one win, but consistent success, that comes from having the process, the tools, the discipline.
Man, it's been really eye-opening digging into this. It's such a specific, intense corner of the market. Clearly not for everyone, not for the faint of heart, certainly. Requires serious time, serious skill.
For sure.
But you can see the appeal, right? For those with the right mindset, the right tools, the potential for those incredibly fast gains is there.
It is. First wave trading. It's unique, defined by that speed, the volatility, and yeah, the specific skills needed.
Yeah.
Those tools we talked about, scanners, alpha groups, smart money tracking, they seem absolutely essential if you're even thinking about playing this game.
Right. So as we wrap up this deep dive, it leaves a pretty interesting thought, doesn't it? For you, the listener, think about this. This super intense, data-heavy psychological trading. What does it tell us about where markets might be going, this kind of hyper-accelerated environment? Is this a peek into the future? Could we see similar dynamics pop up in, I don't know, other assets eventually?
This is a fascinating question. Definitely something to mull over.
Absolutely. Well, thanks for joining us on this deep dive.